Ever wonder which rental strategy is the best for building a profitable and stress-free real estate portfolio? Today, we're going to dive into how midterm rentals compare to short-term and long-term rentals, including the pros and cons for each strategy. Welcome back to day 6 of the series, Building a Successful MTR Business. My name is Michelle, and I'm here to help you through your real estate journey by providing you my story that will hopefully inspire you to take a leap of faith and build your legacy while impacting others. So today we're going to break down how MTR stacks up against short-term and long-term rentals so you can decide which strategy aligns best with your goals. For those of you that are just tuning in, I have been in the midterm rental space for 4 years now and have most of my portfolio as MTRs. When I first got into real estate, I knew I wanted to buy and hold, but didn't know anything other than long-term rentals. I knew I wanted to buy and hold, and someone else introduced me to the midterm rentals, which wasn't such a common thing as it is today. Since most of our portfolio is in San Antonio, which is a big military state, midterm rentals are very common here. So I started in the midterm rentals from day one, but have evolved into STRs, MTRs, LTRs, and today we're going to compare. So short-term rentals, everyone kind of knows it as STRs. So let's talk a little bit about the pros. So higher income potential. STRs typically generate higher income per night compared to other rental types, especially in tourist-heavy areas such as like Orlando, Vegas, Miami, Arizona, which is a really hot market right now. And I don't mean the temperature. They also have flexibility in pricing. You can adjust your nightly rates based on demand, such as charging more during your peak travel seasons. You can diversify your tenant base. You can attract tourists, business travelers, and event goers. A lot of people know them as Airbnbers. They are really vacation renters. Airbnb is a marketing platform, not a type of guest. Just wanted to let you know that. So now the cons, higher turnover. So constant guest turnover means more frequent cleaning, management, maintenance, and the need for guest communication. Meaning when you start off, your weekends are no longer yours. Another con is season fluctuations. Income can vary significantly depending on the season, leading to unpredictable cash flow. So a major one, which is especially now, is regulatory challenges. Many cities have strict regulations or bans on STRs, adding layers of risk. So I remember managing my first short-term rental. It was great when it was great during peak season, but off-season, vacancies really cut into my cash flow. Plus, the constant guest turnover felt like a second job. So even though we are hybrid, we try to stay away from vacation and short-term rentals as much as possible. It can get really relaxed and easy to get a booking from an OTA, which stands for Online Travel Agency, aka Airbnb and VRBO, but you will work all the time, even on the weekends, until you actually get a team in place. So let's jump into long-term rentals. So the pros is stability and predictability, which months lease or longer, you know what your income will look like for a year. You get lower management needs. Once a tenant's in place, there's less ongoing management compared to STRs or MTRs. Steady base tenants. Long-term tenants often provide consistent rental income and fewer property turnovers. In my case, most of my long-term tenants tend to stay 2 to 3 years, and I honestly forget that I have tenants in these properties. Some of the cons, however, is lower cash flow. The monthly rent is lower compared to the STRs and MTRs, limiting your cash flow potential. If you do have something like a maintenance situation, it can wipe out your cash flow for the annual. So you just want to make sure that you are preparing for that and you are utilizing as far as a budget and using the treasure chest. Long-term rentals gives me a predictable income, which is nice, but I always go back and forth if I want to turn it into an MTR or not. When I run the numbers year over year or when a lease is up, those particular properties are better in an LTR strategy, at least for now. And lastly, let's talk about MTRs. Some pros are higher cash flows than LTRs. MTRs often bring in 20 to 30% more income than a traditional long-term rental because they are fully furnished and cater to temporary housing needs. Another pro is steady occupancy. MTRs tend to have fewer turnovers than STRs, which tenants stay for 1 to 6 months, which leads to more predictable cash flow. And our average tenant is 6 months. Another pro is flexibility in rental terms. Unlike long-term leases, MTRs allow you to adjust rental rates more frequently to reflect current market demand. Now, some of the cons are initial furnishing costs. MTRs require a higher upfront investment to furnish the property, which can be a barrier for some investors. This goes for STRs as well. Though recently I started to discover furniture rental companies, and they are more cost effective if you are only doing this for a few years. I never thought to explore that until we recently needed to do it for a government project. I highly suggest looking into that, especially if you're arbitraging units and you're only signing a 1 or 2 year lease. In my case, I like to do a 3 to 5 year exit strategy. If I do the 3-year exit strategy, it actually does pan out to be a little bit less costly, and then I don't have to worry about building furniture, buying all the furniture. So it could be an option for you to look at. I was pretty surprised on the pricing that is for monthly rental. So another con is potential vacancy periods. While turnover is less frequent than STRs, there could still be gaps between tenants that impact your cash flow. What we do is we will sometimes put a short-term tenant in the gaps while we are still looking for the midterm tenant. Another good one to discuss is more complex marketing strategies. Though Airbnb, believe it or not, is our higher producing lead generation for our properties, you have to have a good marketing strategy for your MTRs. Outreach to businesses to let them know that you have inventory. We reach out to other operators in the area, even though you may be registered with some of the big relocation specialists, doesn't mean that they will always contact you directly. As I network with other operators, I have operators that have been 100 miles away from where our inventory is and have no inventory in my market, and they've actually gotten a call and a lead, and then they'll reach out to me. So it's always good to know what other operators are in this business so that you can collaborate. Though the series is mostly about MTRs, I do want to make sure you don't just put any property as an MTR because you think it will be a happy medium or you'll get a little bit more cash flow. Later on in the series, we'll discuss how to figure out what buy and hold strategy is good for MTRs and in which market and how I research that. So what sold me on MTRs was the ability to strike that perfect balance. I wasn't dealing with the hustle of weekly guest check-ins like we do with STRs. And I also am earning more than a standard LTR while enjoying lower management needs. Also, it's the impact. I truly enjoy housing displaced families and workers coming into the area. I know what you're thinking. How do I choose the best strategy for my portfolio? Well, here are a few questions to consider. Do you prefer stable hands-off income? LTRs might be the best for you. Are you okay with the hustle and frequent management for higher income? STRs could work, but you'll need a solid management plan. Looking for a blend of flexibility and consistent income, that's where MTRs come in. It offers that balance. I would encourage you to write down what your top priorities are: cash flow, management time, or tenant stability. This will help you choose the strategy that fits best for your lifestyle and your goals. While each strategy has its merits and I have properties in each one of these, MTRs offers a sweet spot that suits for my personal goals. Higher cash flow, less frequent turnovers, and reliable tenant base. They are perfect if you want more income than long-term rentals without the intense management of STRs. Once you have systems in place and a team, things become a lot easier. You may just not have that in the beginning. Understanding the pros and cons of each rental strategy is crucial for making informed investment decisions. MTRs provide an incredible middle ground with flexibility, profitability, and manageable effort. Remember, the right strategy for you depends on your goals, your market, and your lifestyle. I am curious which rental strategy resonates with you the most and why. Drop a comment below and let me know your thoughts. And if you haven't already, hit that subscribe button to stay updated with our series. Tomorrow, we're going to go deeper dive into marketing strategies for your MTR to help you attract those high quality tenants and keep your places occupied. You won't want to miss it. Thank you again for tuning in, and I hope I gave you some wisdom and encouragement to keep building your wealth. Bye for now.